I think we're now live. Nick Van Marken, great to have you for the afternoon session all about numbers with STR and ForwardKeys. What a great session it's going to be. It's great to have you, Nick. You've been a great supporter of our events over the years, a great friend, and when we worked together many, many years ago.
Yes, we certainly did. And it's great to be here, Jonathan. Great morning session, and well done for putting this all together. So good afternoon, everyone from London. Good morning to those of you finishing your breakfast over in the far west, and good evening over in Asia. I hope you're still with us. So as Jonathan says, we're going to run a session that's going to be heavy on science and data, which, as we're all discovering, is actually coming to the forefront at the moment. And I can't think of two more qualified individuals to talk about the industry in its widest sense than the two joining today. Olivier Jager, who is the CEO and founder of ForwardKeys, which is an aviation consultancy and looks at data and tries to forecast what's going to happen in terms of travel movements. And of course, Rossmann, who's the managing director of STR, a data service that we've all become incredibly reliant on in the hotel industry and literally looking at it daily. Both of these gentlemen are going to firstly run through a presentation, giving their perspective initially from Olivier on aviation, and secondly from Robin on the hotel industry. And then hopefully we're going to have about 10 minutes at the end to take your questions and pose any other questions that may come up from their presentations. And that'll take us to 30 minutes. So without further ado, hopefully I'm now going to be joined by Olivier, who is actually speaking to us from Abidjan in Côte d'Ivoire. So by the miracle of technology, there he is. And you can see he's got some authentic artwork up there next to him. Olivier, good afternoon and welcome.
Got this one as well.
Yeah, this is now the most essential passport you can have. Welcome, and of course, thanks for joining us. I'm going to hand over to you because we're obviously fairly tight on time. I've introduced you. Please go ahead, and hopefully you're going to rejoin us. I know you've got PowerPoint. We haven't had any PowerPoint today, so fingers crossed out there to the 2,386 people currently watching this that the PowerPoint and Olivier come back. Fingers crossed. Sally, any news on Olivier?
Yes, I'm here.
Ah, great. Okay.
Yes, I was trying to switch to the PowerPoint.
Fair enough, you did it.
As a transition. Nick, thank you very much for your kind introduction. Good afternoon, good morning, everyone. The purpose here is to try to pull out some data that relate to travelers and traveler trends, so that we can help you to understand what is going on and what is the perspective forward-looking. At ForwardKeys, we basically process a lot of data that relate to travelers, whatever they are, because we help our customers being, luxury brands or duty-free operator or airports or hoteliers to basically get equipped, if you will, vis-a-vis the way this the traveler landscape is organized. So the first thing I'd like to share with you is, if I'm able to move slide, is how we're going to remember the first quarter of 2020 in the future. And I think we'll be remembering as the quarter when we lost 40% of our travelers and visitors, 38% worldwide, right? Obviously, that's led with little glory, obviously, by Asia Pac with minus 50%. You can note here that Northeast Asia was minus 63%, and that essentially is due to China. Followed by Europe, that got a little bit later in the game, and then Africa, Middle East, and the Americas with 26%. That started later. Obviously, all you hoteliers, when I show you arrivals, well, the proxy would be check-ins. But as we all know, what really is meaningful vis-a-vis our business is essentially the bookings. So the bookings, we've been monitoring the bookings. So in a global fashion, bookings made for international travel by departure region since the beginning of the year, and we could see that as soon as the 6th of Jan, this number of bookings when compared to previous year were negative. There was a deficit of booking. So this red curve this red line that you can see here is basically the addition of new reservations from which we remove the cancellation. That is why this curve goes down so deeply here. So not only does it reflect on the fact that a lot of the bookings were canceled, but in addition, that there is a huge deficit vis-a-vis last year. And that gives us to a peak, which is 16th of March, before we start seeing a rebound. But let's not fool ourselves. This rebound is not related to the fact that there is any sense of recovery. It is just due to the fact that there are less bookings to cancel. We should also note as well that the most reactive countries or region of the world, as we all know, was Asia Pacific. You can see these yellow bars on the left-hand side of the graph, which are seeing how quickly all bookings were basically canceled in Asia, or people were not booking, or it was not a possibility to book, right? And how that was in starting the 24th of Feb, followed by Europe, that was lighter in the first part of Feb, and really became aggressive to get this peak on the 16th of March, where to the extent that actually that peak in cancellation and no bookings, if you will, was joined by the Americas at 79%. So what that all says is that it's really not good, but that's historical right now. And the question for us is what's ahead of us? Typically in our business, we're looking at the booking patterns, as you all do, and see how this pickup curve, if you will, addresses the needs, shapes up the future performance. So here we've been wanting to look at the theoretical future performance of the Americas, Northern, Central, and South Americas. So we can see how the demand curve, if you will, of bookings on the week by week shapes up about travelers that travel to the Americas for the months of June, July, and August. In orange, you have last year. You could see that 53% of the bookings for that June, July, August period are really happening, during that period that basically peaks in May, essentially. But this year, you can already see that starting February, well, until February, everything was like, normal, in control, pretty much equivalent to last year. But the dive took place in March. So that's to the extent that by mid-March, that fall into the negative, was basically essentially cancellation. So from our business standpoint, when we look at this, we're thinking, you know what? There is technical room for recuperation. It could work. It could work. But that's only technical, as we all know. My personal opinion is there obviously no room for recuperation, no room for a rebound, and there are two fundamental reasons for this. One is that our customers our governments and our states are too busy with domestic priorities that relate to COVID-19, obviously, to start focusing on how to reopen borders. As Nick stated, I'm here in Abidjan, and like in many places of the world, this virus is coming from abroad, and this virus flew into a plane and got into an airport. So we have to go through. We'll have to overcome that perception, right? Later, the second step, obviously, is to say, well, how are we going to get equipped? How are we going to get organized so that any countries out there is willing to open the doors of an Airbus 380 with 400 or 500 people on board coming from all around the world, while they are feeling that it's not a potential threat to this difficult situation that is difficult to control domestically. That is a huge challenge. And the next challenge, obviously, is we've broken the chain of travel. We'll have to put these planes back in the air. We have to reinvent the routes they want to fly. We're going to have people to start booking again, and that is going to take a lot of time. Obviously, when people think, well, there is a short-term future, you just have to look at the Chinese. They're handling it. Well, that is the reality on the Chinese. The graph you're looking at are the daily tickets issued in China for domestic travel. Okay, so in orange that's basically last year, and in blue that's this year. So you have the normal period where you can see the weekly seasonality, which obviously is dear to hotelier, where you should really see that people hardly book on weekends, for example. And then you see a period of what I would call crash here, which obviously is brought into turbulences because that's also the period of Chinese New Year. Now, we got to the bottom during the week of the 12th of Feb, and what is of interest to us here for the matter is the rebound. Well, that is the rebound. And the rebound is indeed a rebound. It's much better than the period before, but it's flat. There are two things here that I think are important. For the last 4 weeks, this rebound in China is flat. In other words, not so much for those that believe there is a V-curve and an immediate rebound. There is no such thing. It is not happening. Might happen somewhere else, but it's not happening in China at this point in time. The other thing I'd like to stress here is this rebound, is worth, 0.4 million tickets a day out of our database, when in normal time, you're more in the range of 1.2. So this rebound is stalling is in the range of 1/3 of what business is typically. The next question obviously becomes, okay, well, is that rebound going to be about leisure, or is it going to be based about the corporate crowd? So we wanted to compare two cities, Shenzhen and Hainan. Obviously, one was more of a business profile, the other one more of a leisure profile. And just to show you that basically, obviously, Shenzhen, in terms of bookings, in terms of arrivals in this case, was less impacted than Hainan, possibly because it was a business destination. And we could see that the rebound of Shenzhen has been a bit faster than Hainan, but we can see that the revival of the leisure business is still far away to go. I would like to add that the performance of Hainan in China is an essential component, because what we're witnessing as well is geopolitical. It is of interest from China that Hainan becomes a favorite destination for leisure and for Chinese. It is of interest to the Chinese government that Chinese people spend their money over there, and Hainan has been making it official that they were, ready for business. But again, that is the shape it's taking. And one of the reasons is actually this, which is when you look at the Chinese market right now, the key feeders of Hainan are not open for business. Beijing and Shanghai, that you could see on the left part of this graph, are basically respectively 10 to 20% of the normal volumes of travelers they are shipping to Hainan, meaning once again that the leisure business is not active. Obviously, what we should remember from the previous slide that relates to China, I did not even spend a minute trying to pull out data that relates to international travel. There is no such thing outbound China. It's all about domestic, which obviously confirms that is going to be about the rebound is going to be domestic. But what it said is that it's going to be slow. Right. So I didn't want to leave you with only negative stories, and I also wanted to share this with you. Among the data we process comes a search data. In this case, these are Skyscanner data. And the way you should read this is to say, in Italy, 40% of the people that have been looking for a flight for a travel in March have been looking for Q3. In a much higher percentage, a proportion than it was last year, and even more for Q4. So I guess you could tell me, well, people in Italy, they know they're not going to fly in Q2, so it's only fair that they're looking for Q3. Yes, but I'd like to stress that it's important to me in this current context that people still envision to travel. And I think and dream of traveling, because I guess if you cannot fly, looking online where you could be going. By the way, this is about Italy. The people the destination people looking for, number one is New York. And the same trends are observed in Spain and France. So I think that is optimistic, even though it's not answering to when that's going to be possible again. Nick, that's all for me. I just wanted to tell you that, well, that's our business, to monitor this data and try to identify whenever we're going to be seeing early signs of recovery in this in the industry, basically, out of the data we process.
Olivier, thanks very much. That was extraordinarily interesting and quite sobering, although the touch of optimism with the Italians. We'll come back and talk further about your presentation, but I'm now going to ask Robin to come on and run us through what STR is seeing. Robin, good afternoon. Over to you.
Thank you very much, Nick. Thank you, Olivier. I'm going to try and share my screen quickly. Good. All right. Well, that was a great introduction to what we're seeing on a hotel performance perspective. And I'd like to cover off the following in the next 10 minutes or so. Just really a deep dive on what we've seen so far in terms of the impact of coronavirus on the industry, some China green shoots, and then importantly, having learned from those China green shoots, how does that apply for the rest of the world? And in terms of what we've seen in other downturns, what can we expect to see coming out of this downturn? And I kind of split the presentation into 3 different sections too, using the great quote from Donald Rumsfeld when it comes to trying to predict the future, and that he said, when you're looking at the future, you really need to appreciate that there are known knowns, there are known unknowns, and there are unknown unknowns. And what I mean by that will become more apparent as we go along. But starting with the known knowns, we know that coronavirus has had a devastating impact on our industry. And there's probably no better way to show it in terms of the global impact than looking at hotel occupancy. So this is from the 60-odd thousand hotels that we collect data from every day, week, and month. We break those down into about 2,000 different submarkets around the world. And that little green or red dot means that in that particular submarket, occupancy on a rolling 7 days basis was either positive, green, or negative, red. And this is the beginning of the year in January. And perhaps maybe the first surprise to many is that there's actually a lot of red already, and none of that had to do with coronavirus, and all of that, majority, had to do with the fact that we were already in a situation where supply growth around the world in many cases was outpacing demand growth, and occupancies were declining, particularly in the US, particularly in Middle East, and many places in Asia and South America. So as we go on and we move to the 2nd of February, so a month later, this is the week commencing 2nd of February, and you can see that undoubtedly following the lockdown around the middle of January of Hubei province and Wuhan, that China was firmly in negative occupancy declines. As we move on to a week later, the impact of the Chinese outward bound market was being felt, and you can see those declines spreading across Asia Pacific. It then kind of stayed that way for the next week or two until about the 1st of March, where things really started to spread to Europe and in particular Italy. And it's that stage where we saw the global impact of coronavirus commence. And it commenced with the cancellation of major events like the Mobile Congress in Barcelona, but also importantly, with companies acting far ahead of government advice and putting in travel bans and restrictions on their employees. So we started to see declines, particularly across the world, but in North America. And that accelerated as we came through to the week commencing 22nd of March, where we started to see mass closures of hotels around the world. And a week later, I think it's fair to conclude that by the end of March, the global hotel industry had caught its own version of coronavirus. Looking at that at a more macro level, you can see that China was already at the bottom from the 1st of February and has slowly been recovering. We'll dig into that in a bit more detail now, but Europe and the US trailing about 2 months behind the impact on the industry in China as a result of the delays and the impact of the virus. And you can see that those are now trending down towards the bottom whilst China is on the way up. So let's talk a bit about China. I appreciate that there are many reasons why you could argue it is not a case we should compare against, and it's not relevant. However, it is the best scenario that we have that will show us the shape of the recovery. And when we look at other regions of the world, we can take that and apply what we know in terms of the differences of those regions to see how the recovery might differ. Now, China is very much a domestic-driven market. 95% of stays there are from domestic tourism. And what we can see is actually quite encouraging from that respect. Now, it's not often that I would say an occupancy of 30% for a whole country would be encouraging. But when it's been sitting at below 10% for about 2 months, as it did between the middle of January and through to about the beginning of March, you can actually see it has begun to recover, initially slowly, but in the last 2 weeks, it went up 10 percentage points. So some decent recovery, at least, which may sound not good, but in the context of many markets that are almost completely closed, it's certainly better than what we're experiencing in many other regions of the world at the moment. So I'd like to just pick on one of the markets in particular, which is Chengdu, because that is an industrial city that has seen some strong recovery. And the interesting thing there is that when we look at what type of hotels have recovered sooner, it has tended to be, I guess unsurprisingly, in the mid-scale and economy segment of the market. And where hotels have struggled a bit more is on the luxury and top end of the market. And when we reflect on what has happened in China over the last 3 months, I think these are the main key points. That we saw about 40% of all hotels that work with us, so about 6,000 hotels work with us, they're 40% closed, and they remain closed for about 2 months. And now 2 months later, 2/3 of those have reopened, and there's still about a third left closed, but we have actually seen them close and then, I think at a relatively rapid pace, reopen. We saw F&B play a really important role during that time. And sometimes necessity is the mother of invention. And we know across the world that hotels for a long time have needed to do a better job in utilizing their F&B facilities. And I think this is one case where it's really forced that. And so it's created some new revenue streams for the hotels there that no doubt they will plan to continue. In terms of what's driven that recovery, yes, there has been some of that's been related to quarantine hotels and, for restricted government use. However, a lot of that demand has come from normal places. So a rebound of domestic leisure, particularly in Sanya, Hainan, which Olivier talked about, is a resort market. We've seen that market get back up to about 30% occupancy. Still way behind where it was, but picking up particularly on the weekends. We have seen corporate business come back, but it tends to be less city center and more outside in the tech zones and the industrial park areas. And of course, we have seen some demand coming from quarantine guests, particularly those inbound from outside the country that are having to quarantine for a number of weeks. And we've seen lower scale hotels do better. So moving on to recovery cycles and forecasts. And this is where we get to the known unknowns, because we know what we need to look for and what the different scenarios are, but we don't know exactly which one's going to play out. And if it's something like a SARS recovery, and you would have heard Roger Bootle refer about this, it was a very sharp V recovery. We saw 3 months of decline and 3 months of recovery, and we were back at the occupancy levels before the impact of SARS. But SARS only impacted something like 8,000 people around the world, and there is obviously no doubt that coronavirus's impact has been far more extreme. So whilst many economists are, and I do find it surprising, but hopefully true, forecasting a sharp V-shaped recovery for economies, I think that in our industry, in travel and in hotels, that it's likely to be not as sharp and not as quick because of the likelihood of continued restrictions on people's movements and social distancing, and particularly given each country in the world is approaching this in a different way. So whilst the world is not better, it's likely that countries are going to need to restrict their borders in a way to prevent the virus coming back, even if they have it under control in their own country. The question then is, if it's not like a short, sharp recovery, what would it look like if it was something like the global financial crisis? And you can see here that and this is showing Europe, that if we're talking about a scenario like that, we are talking an extreme and protracted recovery period. 2 years of decline, and then really for RevPAR, it took it 5 years to recover from that, and for profitability, another 2 years on top of that. Now, clearly, we're not hoping for that. Nobody is. And the good news is that from an wider economic perspective, the vast majority of economists are not forecasting that kind of economic recession, which would drive this kind of impact for hotels. So we would certainly hope that it would be much faster than that. And when we look at the forecasts that we produce with tourism economics, that is the case. So here you can see how we've changed the forecast for tourist arrivals. And our forecasts have got worse and worse each time as we've updated them. However, what's remained consistent is it's a sharp downturn this year, followed by a sharp recovery next year. Now, going back to the point around, is China comparable? Well, yes, it is, and yes, it isn't. And it isn't because you can see that when we see the forecast RevPAR changes across the world, we're expecting China and particular Asia to see much less declines this year, down about 30%, whereas we expect Europe would be closer to 40% and the US closer to 50% down in RevPAR. Going back to Europe, we are expecting that to recover, and we'll get back up to about 90% of where we were in 2021, and it'll take another whole year to get back to 2019 levels. So by 2022, getting back to 2019 RevPAR levels across Europe. But all of that is based on a number of assumptions around different scenarios, and clearly there are many known unknowns that could change that. And I thought I'd just pull out a few of them around the 3 different types of demand that really drive business for hotels. First is leisure, and in the faster, quicker recovery scenarios, we're living in the wonderful world where everybody takes the money that they've saved as a result of being stuck in their houses for the last 2 months, and then demands their God-given right to travel the world and sit on the beach, and we end up with a booming leisure demand that's coming through, maybe not in 2020 so much, but certainly in 2021. I think in any of those scenarios, it's likely to be domestic-led consumers, and it may also have something to do with people that have had the viruses and are immune. Obviously, in slower recovery scenarios where the virus persists, borders remain closed, I think we can expect it to take a lot longer. And I think we've got a sharp reminder that governments have an ability to really impact this. The example being the UK yesterday advising all citizens to cancel all travel for leisure or non-essential purposes indefinitely at this stage. And that clearly is a worrying type of advice to be receiving for our industry. On corporate, we expect that to take a little longer to recover. A lot of that will be dependent on the shape of the economic rebound. I think in-person contact will always be important. However, we are likely to see some changes, behaviors change, particularly when you look at an event like this. And the portion of demand that's likely to take the longest is corporate groups. In a best case scenario, we'd see those postponed events happen in Q3, Q4 this year, but I think 2021 is more likely. And it may be that attendance levels will remain suppressed until we have a vaccine or until we're through any kind of economic downturn. So those are just some of the known unknowns, but then we've got all wealth of unknown unknowns we will have to deal with. And the reality is that we don't know what those are now. And it's going to be up to all of those to watch and adapt to those as they arrive. And with that, I'm going to hand it back to you, Nick.
And thanks very much. Sobering stuff, and just brings home, of course, the fact that all of us are grappling with the same challenge, which is, we don't know. There's more of these unknowns than any of us have had to deal with before. Olivier, if I can start with you. The aviation industry has obviously been extraordinarily badly impacted. How do you see the recovery playing out? It's clearly, at least from my perspective, seems unlikely to be particularly even. Are there parts of the industry, whether it's carriers or geography-wise, that are worse exposed to this? And are there parts that you think will naturally be more resilient, or is it difficult to say?
Well, I guess if you ask an economist, he might have some ideas on this. We're data guys. The fundamental of what we try to do is to read into the data what can be read, and where we're really challenged right now is, there's no raw material to use, right? So we really don't know where that is taking, and our bets is equivalent to anyone else. I mean, we see all these airlines looking for fundings because not only they're bidding cash, but in addition, everybody is waiting for consolidation. So the guys who's gonna get the other guys is the one with most cash. And not only is it happening at airline level, but it's happening at country level to tell you how big and geopolitical that is converting. So I don't really have an educated opinion, or it would just be an idea. The only thing I can say really, and what we've seen in previous situation, which are Ebola, chikungunya, SARS, etc. And to get back to Robin, is in this context of crisis, we see that the VFR guys, visit friends or family, are the one that they're always on the rebound. They always think they're safe. They always think they know where they're going. They always have a good reason why going there, which is check on friends. The second one is really the business guys, because they're not the one deciding. The one that's deciding is their boss. And the third one is obviously the leisure guy, which everybody wants to see. So it's going to go through this order, but nothing of that is going to happen until there's no airspace. So until there's no airspace, there's nothing. And then, as I was mentioning during the presentation, at the end of the day, the chain is broken. And if you freeze whatever you have for a period of 1 month or two, maybe you can still assume that when you put it out of the freezer, it's still going to be operational. But every week tends to lead us to a situation where there's going to be a lot of refoundation. And then I would go with Robin. I mean, we're really talking about years if it's to get back to where we are. That would be my 2 cents, Nick.
Yeah, and I think the data that you've got coming out of China was very striking. So you're running at 1/3 of what was the previous norm. I've been struck by this optimism out there about a V-shaped recovery. It feels a little ambitious from where I'm sitting. Been, like all of us, we've all been through a few of these before, but this is pretty starkly different, and it just feels difficult to imagine that the aviation industry, where you see literally thousands of airliners parked at airports, is not going to take months to start moving again, and that's assuming that we are able to move. Robin, what's your thoughts on the parts of the industry that are more or less exposed? I mean, we hear a little about relief tourism and revenge tourism and sort of people going back because they're just desperate to go back traveling. Are there any bits of this industry that you think are going to be permanently scarred, as it were, or where there'll be fundamental changes? I'm thinking particularly about MICE. You touched on the Barcelona Mobile Congress. It's difficult to imagine many companies signing off on 100,000 people going to Barcelona in 2021, if at all. And it's difficult to imagine that the organizers are going to be able to give that assurance that it's safe to actually come to Barcelona. And maybe people themselves might think, why on earth would I need to do that or want to do that? Thoughts on that from your perspective in terms of segments?
Yeah, I mean, I think in many ways we're dealing with a situation that we've never had before, but in many ways we're dealing with a situation that we have had before. We've certainly had the impact of fear and safety over travel before. We've had a number of terrorist attacks around the world, whether that's large things like 9/11 or the 7/7 bombings in London, or the other terrorist attacks that happened in Europe back in 2015 and 16. And at the time with all of those, we always did think that it wouldn't come back. But what history tells us in that regard is people have a surprisingly short memory when it comes to risks, and that you know, in the last terrorist attacks, it was really only 3 or 4 months of decline, and then there was recovery. And in the worst case scenario, you're talking about 2 to 3 years, a sort of 9/11 or a Tunisia beach attack. So I think as long as the perception, and it's important the word is perception, of safety returns, people will start to travel again because they want to. Where there might be a delay to that, with that, particularly on the MICE side or the corporate travel side, is where companies are putting cost restrictions in place. And I think there, a lot of that depends on how much of this does play out in terms of an economic downturn. So I think, for me, I personally think it'll be a mixture of putting 9/11 and 2008 and 9 together. In 2008 and 9, you didn't have this sharp drop-off. We now have a sharp drop-off. In 2008 and 9, we had a sharp recovery. Sorry, not 8 and 9. In 9/11, we had a sharp recovery. After the global financial crisis, we didn't. And I think if you combine those two, that's probably what we'll have. We'll have a sharp drop-off and then a much slower recovery than what we saw out of 9/11. But I think it'll come back. At just how long it'll take to come back.
Are you a V shape or a U shape or a bath shape from where you're sitting at the moment? Just seeing.
I'm sort of a capital W. So not one where the W goes all the way up to the top and then down, but you know, one of those sort of where there's a drop and then there's sort of a comeback in the summer, and then on the basis that I've not seen anything that suggests to me we're going to get through this until there's a vaccine, and the vaccine is only going to come through early to mid next year, we'll have another drop down and then we'll have a recovery. So I'm going to call it a W shape, but no economists are forecasting that. I think that might be something that's more specific to the travel industry.
So I think what I'm hearing from both of you is that essentially we're going to be in for a pretty prolonged rocky road. It's going to be bumpy for a while, and any notion, I'm intrigued by the Italians looking to go to New York in Q3. I mean, bless them. But you know, I guess if you're sitting inside an apartment, you are going to be looking at what you do next. And one of the things you want to do, to your point, Robin, is go somewhere. That's an essential sort of component of what we're all about as humanity. But it sounds like it's going to be pretty bumpy for a while. Gentlemen, thank you so much. It's been tremendous hearing from you, if somewhat sobering. We could sit here, no doubt, and debate this for ages, but we are out of time. So I'm going to have to thank you both. Olivier, thanks for coming in from Abidjan. It was very interesting. And Robin, thanks
very much
for everyone's track.
Yeah, Nick, I'll head over to the STR booth, so if anybody has any other questions after this, they can come across there and we can answer them there.
Cool. Thanks very much, Robin. Gentlemen, thank you. Appreciate it. And it now is my great pleasure to hand over to René Baal, who is going to run the next panel, which is the Hammer team from around the world, giving us their perspective on what they're seeing and how to cope in a crisis, which is something I'm sure we all look forward to hearing. So from SW6, this is Nick, over and out, and thank you all for joining. It's been great fun. Thank you on what they're seeing and how to cope in a crisis, which is something I'm sure we all look forward to hearing. So from SW6, this is Nick, over and out, and thank you all for joining. It's been great fun. Thank you on what they're seeing and how to cope in a crisis, which is something I'm sure we all look forward to hearing. So from SW6, this is Nick, over